Okay, I'm Stephan Schoess. I'm at the RiskMinds conference in Geneva, and I'm here with Dr. Philippa Malmgren with the honor and privilege to give the first presentation this morning, describing the real risk that financial institutions are going to face over the next years. So maybe you could give a short summary of these risks.
Well, what I was talking about were things like the resurgence of inflation in emerging markets, which is a function of a supply-side shock because of the global financial crisis. There's no lending to things we take out of the planet, so agriculture, mined assets, oil, and that's causing prices to rise. That's giving rise to inflation in emerging markets, and then of course all the free money in the system is going into speculation, which means all the hedge funds are buying these same assets and pushing the price up. And this is a big problem because everybody's investing in emerging markets at a time when inflation is starting to destabilize those populations. So that's one big risk. And a second one is the risk that we actually will get sovereign defaults. And I think we absolutely, definitely will have sovereign defaults. They get done in different ways. It may be that we have inflation as one option to default. One option is rescheduling and moratoria. I don't think we get the Russian style, we'll never pay you back one dime. That's not likely. But you know, the relative mix is going to throw a lot of volatility into FX markets, into fixed income markets, and I think these are two huge risks on the landscape.
Let's talk about the first type of risk. Do you think financial institutions actually look at this, or are they much more concerned with new rules and regulations that are coming up the pipe?
Well, I personally think that everybody in the financial community is spending way too much time analyzing things like the Dodd-Frank bill, thinking that this is the foundation, this constitutes the rule set that they're going to have to abide by. I think that's ridiculous. First of all, that's the beginning of the story, not the end. We're going to have a lot more coming down the pipeline in terms of regulations. And it's a highly fluid environment because politics is very volatile now. And we're going to see the public electing different people at different times, and so it's going to change. And second of all, this isn't even the primary issue. If you're in markets, you shouldn't be focused on what they are prohibiting. You should be focused on what are they not prohibiting, because that's where the innovation will occur. That's where money's going to flow. So I'm more interested in what are they not addressing than what they're addressing.
So very similar how we got into the last crisis.
Always.
Right? Moving things from the balance sheet to off balance sheets, etc., because there were regulatory arbitrage opportunities, nobody saw it, etc.
But the market smells it every time.
The market did ultimately adjust, and you know, there were winners and losers, mostly losers, I suppose. Any suggestion you would have to financial institutions how they can refocus, maybe not on fighting the last war, but really thinking outside the box? What does the financial risk officer or the CEO have to really do to get outside of the box?
Well, I think first of all, your primary focus has got to be on innovation and where is the new opportunity that is being created by the current set of circumstances. And I don't just mean where do you think a price is going to move. I mean things like, I always think of in 1962, John F. Kennedy faced a budget deficit. So he said, right, we tax somebody to raise some money. And like today, he wanted to tax the financial services world. So we announced a tax on the sale of all U.S. government bonds. And then two enterprising guys literally got on a plane from New York, went to London and said, hey, we can sell the same bonds in London without paying the tax. And guess what? That was the beginning of the Eurobond market. That's the kind of innovation which I think the chief executives of banks ought to be encouraging, focused on. It's the next wave of instruments, of markets, that is going to be where the money's made.
And maybe to the surprise of some young bankers, we did have planes in 1962.
We did have planes in 1962.
Thank you very much for your answers, and have a great conference.
Thank you.